Hey guys, welcome to another episode with me, Shashank Udupa, and today we're going to do an IPO review of Nykaa. Now, Nykaa is something that is just recently filed for an IPO, and it is something that is going to get listed very soon in the stock market. So, we are going to do our own review of Nykaa. So, I'm not going to waste any more time because a lot of people cry that I waste a lot of time. We're going to just jump into the presentation, and I'm going to show you one by one how this entire presentation looks like and whether it is a good thing or a bad thing to buy. Okay, so let's do Nykaa IPO review. Now, the first thing what we'll do in this entire video is slightly long, so I'll keep it short. We're going to do an introduction, business model, key highlights, SWOT analysis, financial overview, and finally we will give our own take. Now, just to give you a quick short format of what this IPO is, the IPO is basically 525 crores that they're raising now from a primary perspective. That means the money will go into their account. They're also selling 43.1 million shares, which is a secondary sale, which also seems like quite a bit. Now, the major selling shareholders here are Sanjay Nair, TPG Group, Lighthouse Group, and Sunil Munjal. Now, Nykaa also plans to raise around 4,000 crores via this IPO, most of which will be paid to existing investors selling their stakes. That means what this can say that out of that 4,000 crores, if you look at this, they're only raising 525 crores in the fresh issue. So I'm assuming 3,500 crores is mostly like an exit to the existing investors. Now, if you look at their financials, which is right above me here, now if you see the total revenue from year on year 19, 20, 21 has actually gone up, right, significantly. Their expenses have also gone up. But if you look at the profitability ratio, that has also gone up from minus 24, minus 16 to actually 61. So this is the only unicorn IPO that's come out quite recently that's also profitable. Okay, so what are we going to do? We're going to look at the introduction of the company quickly. Now let's look at what the company is. Now the company is basically a consumer tech platform that is delivering a content-led lifestyle retail experience to customers. Now, for all the people who don't know what Nykaa is, if you open their website, they basically deal with a lot of fashion products, beauty products, personal care, skin care, etc. Right? So they have a diverse portfolio of beauty, personal care, fashion, and also they have an omni-channel presence. Omni-channel means one is that they're also catering to men and women, and they're also online and offline as well. So both. Now, their company motto is basically your beauty, our passion. So it's a simple motto that they go with. Now, if you look at their value proposition, this is how they actually look at it from that perspective. Content first approach to retailing, deep symbiotic relationship with brands. So they have a very strong relationship with brands. They also have a diverse portfolio of their own brands. Okay, now this is something that we will come to very soon. They have a different assortment of merchandising and curation. Basically, all in all, a beautiful proposition how they do their entire business, right? So this is something that's also very important, but we will come to some key points very soon. How they started, okay, how she started. Basically, the main CEO of this company is known as Falguni Nair. She's the founder and CEO of Nykaa, as you can see. Again, she's standing over me like how we did the Vijay Shekhar Sharma. So Falguni Nair was basically a former managing director of Kotak Mahindra Capital, and then gave up on that post to become an entrepreneur at the age of 50. That's why I say there's no age to become an entrepreneur. She started this business at the age of 50. Why? Because she saw that beauty was an untapped market in India and everything was not organized. So she said, let's get into this vision, right? So her vision was fueled by her interest in fashion and stories of successful entrepreneurs like Ronnie Screwvala of UTV, and also was inspired by Sephora, which was the premium beauty product at that point. Now, India had a market ready to spend on guidance and products, but we didn't have the knowledge and awareness of how to buy beauty products, right? And mainly girls didn't have that knowledge, and a lot of people in India were used to like MAC and Sephora, but now with Nykaa more things have come. Now Sephora is very big in the States, right? Sephora is very big abroad, but what about Nykaa in India? So let's look at some key facts of Nykaa.com. 2012 was the year of establishment. They have around 3 million active users, 40 million website visits, 1 million orders. Their average order value is $17. $17 is a lot of amount for an ARPU, and they have 35 retail offline outlets. If you look at their revenue split of how it works, their skincare in their skincare category, 50% is makeup, 18% is hair care, and 25% is skincare, right? This is how they make up. Now, if you look at by segment, premium quality products are 45%. That means in India, premium quality products are selling and mass products are 40, and the ultra luxury segment only 15% is selling. Now, if you look at by channel, how does this work? 95% is online sales, only 5% is offline sales, right? Now, if you see what are the key traffic drivers for this company, they have good products, genuine products. They have a massive portfolio. If you open Nykaa's website, you'll see so many things over there. Platform for beauty services and specialized beauty content. Now, revenue and valuation will come very soon, one by one. Now, let's look at this success story. 2012 was when they launched, Nykaa. Now, HNIs and NRIs at that point pumped around $3.4 million in this beauty firm in 2014. 2015, Nykaa actually opened their first physical store. Now, in 2016, Hero Group's Sunil Munjal led a $12 million funding round. What a beautiful funding round, because now he's gone to an IPO. In 2016, he had to wait for 5 years, not as overnight new. 2017, the online marketplace increased EBITDA positive in Q2 and Q3, means they became profitable after expenses, before interest, depreciation, and tax. 2018, they launched the fashion vertical Nykaa Fashion. 2019, Nykaa geared up to grow around 100% in revenue, and 2020, they raised 14 million in Series E from TPG Growth. Now, if you look at their 9 years, how the fundraise happens, soon we'll understand how the fundraising happens. In their seed round, they basically took 42 lakhs of seed round at a share price of 10, and the lead investor was basically the owners itself, right? Falguni, Om Prakash Nair, and Rashmi Mehta. This was in April 2012. Then they did a Series A in 2014 where the angels arrived. Now, when the angels arrived in 2014, the funding was 20 crore Series A at a post-money valuation of 100. Means it was 20 crores at 100 crore valuation, 20% dilution at that point. But when you do the post money valuation, it becomes 120 crores. So it's actually 20 divided by 120, which comes up to around 16.7% stored. In that, the lead investor was Indra Banga and Harinder Pal Singh Banga. Right. So these were the two investors that came in at that point for approximately 20 crores. We go to Series B. In Series B, what happened? They raised approximately 60 crores at a post money valuation of 500 crores. That is 60 crores at 440, post money became 500. They sold around 11.9% stake there. The share price from 10 rupees went up to 358, and this was the first institutional capital, and this was TVS capital that came in. Soon, if you look at Series E that went on directly, the funding was 100 crores. Now, from 500 crores, the funding went from 100 crores to 5,700 crores. Share price became 3,530. The stake sold was only 1.8%, and the lead investor was TPG Growth. And finally, a unicorn it became in 2020, where it raised a funding of 166 crores from SteadView Capital, again at by selling only 1.6% stake, and the post money valuation went down to become 10,000 crores, or almost 2 billion, right? Now, if you look at the top people managing Nykaa, Falguni Nair is the founder and CEO, and CEO of Nykaa.com is Anchit Nair. If you keep going down, Nykaa Fashion is Advaita Sanjay Nair, and if you again, it's all in the family itself. But it's very interesting to see that the main people who are leading this is very family-run business, which is good, no problem at all. If you look at the largest shareholders that are there in this company, most of it, almost 50% of this company, is owned by the Nair family itself. And if you look at TPG, Lighthouse Fund, and SteadView are the three, three funds that have entered with 3% each. Now, if you look at this, the investment objective of the IPO, what are they doing this IPO for? Basically, they're going to invest this whatever money that they raise, they're going to do a certain number of investment into their own Nykaa Fashion for funding to set up new retail stores. So, new retail stores they want to set up very soon. Capital expenditure and investment in subsidiaries like Nykaa e-retail, FSN brand, and Nykaa Fashion. Don't worry, I will show you how the entire shareholding structure looks. Expenditure on advertisement and brand visibility of around 200 crores. Repayment of outstanding borrowings availed by the company in one of the subsidiary named Nykaa e-retail. So they want to remove some debt as well, and basically general corporate purposes. Now let's look at how their entire structure is. FSN E-commerce Ventures is the main company, that is the parent company. It owns 100% stake in FSN brand marketing, 100% stake in FSN International. Now, if you look at Nykaa Fashion, which is on the top right, operates Nykaa Fashion vertical, it owns 100% of that. If you look at Nykaa e-retail, it operates 100% of that also. And finally, if you look at Nykaa KK Beauty, which is a joint venture, between Nykaa and Bollywood actress Katrina Kaif for the K Beauty brand, where FSN holds 51% and Bollywood actress Katrina Kaif owns 49%. And I don't know how many of you knew this. I didn't know this as well. So that also is a part of that. Now, what do they have? Right, first they started off as a pure play system, just selling products online, but slowly they've evolved into a multiple different big ecosystem, right? Now on the left hand side you will see they have a product swing, more than 1,000 brands giving 90% of the revenue. Mac, Vela, L'Oreal. They have their own private label brand called Nykaa Cosmetics, which is giving 10% revenue and also giving good margins. They have a services platform for massage, haircut, nails, waxing, etc. They have an omni-channel and adjacent category where they have their own website. They have their own off-platform stores. They do a lot of cross-category expansion and promotion. They have a lot of, now if you look at top below, if you look at the traffic engines, they are basically Nykaa Network, which is a beauty community of 250,000 members, and they have around 3 million monthly active users on this. Where they have Nykaa TV, they have Routine Finder, Buying Guide, Trends and DIY blog, which is basically educating the customer about beauty and fashion. So this is how it is. If their app gets 60% of the web traffic, their mobile site gets 25% and their website just gets 15%. That means almost 85% of their traffic only comes from a mobile first approach, not from a website approach. Now if you look at their business model in little more detail, they have key activities is basically benefits beauty lover to find the best products under one roof, and it is cheap because there's always a sale going on in Nykaa website. The key resources are engaging website and mobile application. As I told you, a lot of offers keep going on the Nykaa website. The cost that they have is basically salary for the staff, maintaining their app, the technological infrastructure, and any marketing infrastructure expenditure that they might have goes there as well. Now rest are all normal. Now look at the Nykaa lifestyle platform, right? The Nykaa lifestyle platform, if you look at this, celebrities and influencers are a part of this platform. They have around 1,300 celebrities as of March 31st 2021. Now basically they have approximately 11 million consumers coming from this, because a lot of branding happens on this. Then they go to Nykaa and they start buying everything from Nykaa. And if you look at the international brands on the right, they have 3,800 plus international brands. So you see how they're using influencers and celebrities to create this awareness to actually end up going and buying on the Nykaa platform. Now, if you look at the revenue model, basically very simple stuff. Sale of products, right, which is basically their own products or partnered products, right? Own products more margin, partnered products less margin. Income from different commission. They also do banner advertisements in their app, on their website. They have discount income and miscellaneous income. So these are the different type of incomes that they currently have. Now if you look at their tech platform, again I won't go too deep into this because it's very tech related. Basically they have the front end, which is the applications, right, which is apps, web, admin, others. Then they have the internal back end services, which is pricing and inventory, product catalogs, discovery, cart, promotions, order service for all the merchants to deal with. And finally they have fulfillment, which is the warehouse management and logistics management. By the way, it's not easy to set this entire infrastructure up from scratch. It is very, very difficult, so don't get fooled by that, right? Now if you look at their customer journey, right, or your consumer journey, it's usually from search and discover. They all come from search and discover. Then from search and discover they go talk to their beauty and fashion experts. They get more education and inspiration, which eventually leads to buying, which eventually leads to using. Once they use it, they come back, give a review, and they buy again, and they come and educate again. So it's a massive web that they've created, where someone comes, searches, gets education, then buys, and then uses, and then becomes a prominent user. Now if you look at some of the brands that they have Nykaa Cosmetics, Nykaa Naturals, which is their own brand. Then they have K Beauty, which is Katrina Kaif Beauty, which is that 51% ownership. Then they have Pipa Bella, which a lot of people might know about Pipa Bella, but it is a part of Nykaa itself. And a few other brands is also owned by Nykaa. Now, if you look at the online products of Nykaa, they have Nykaa Cosmetics, right? Nykaa Naturals. Now, cosmetic basically makeup and beauty and accessories. Natural is basically skincare products like bath and body masks, hair care, etc. K Beauty is basically Katrina Kaif's premium range of products, which is they have lips, eyes, face, and nails, different categories on that. 20 dresses is something in that an apparel product line is there again, which is their own products, right? All have amazing margins. Then they have Niked by Nykaa, or Naked, almost like naked but Naked, nice. Lingerie services and undergarments as well. And if you look at Pipa Bella, which is the last one, which is like this new thing that they've recently started, Pipa Bella offers an on-trend jewelry products such as earring, necklaces. Basically, guys, if you look at this, they have literally covered the entire spectrum. Like nothing's left. If you look at their offline, this is how their offline looks. Nykaa Lux, very similar to like a Mac store, Nykaa On Trend, and Nykaa Kiosk, which is a small kiosk that they have. Now, guys, sorry, I know I'm going slightly fast, but this is wealth of information. So you can slow down the speed if you want to. If you feel I'm going still slow, you can up the speed. Now, how does this work? Right, there's two things with respect to marketing and promotion strategy. So, if you guys want to ever build a D2C brand, please look at all these examples. Right, they have a conversion phase and they have an engagement phase. Getting users to take the next step and downloading the app versus getting users to take the next step to actually download and then buy is very important. So, they have to do a lot of page optimization. They have to improve on their content, which is educational content. They have to get feedback from the customers in with respect to rating. They have a social CRM which sends out these chatbots, which sends out these notifications, and then they track key performance indicators, KPIs, to see how many people have come and bounced off, how many people have converted, how many people have actually clicked through and done a sale. So these are some very important things that they have done. Please read through them. I will give you this presentation after this, right? Don't worry about that. Now they also have a collaboration with top brands like L'Oreal Paris has a collaboration with Nykaa. They have Charlotte Tilbury as well that they collaborate with. They have Huda Beauty that they collaborate with. So they're also collaborating with a lot of people. If you look at their marketing mix, they have 18 warehouses and 73 different stores all across India. Basically, they love doing fast delivery, quick delivery, and that is something that they're doing really well. They're also entering the men's segment, right? The beauty men growth of men's beauty segment is also something that's coming, which is beyond shaving categories like shower gel, face wash, and body lotions. It's coming up as well. Now firm is already a PBT positive, which is profit before tax positive. Expects its fashion business segment to follow suit in FY 21-22, means fashion business also will start becoming positive. There is a large upside for growth given the online penetration in beauty. Firm has 30% of the online revenue in the entire beauty segment in India, which is massive. This is very important. They're planning to go global. They're planning to expand overseas with its private labels, which is Nykaa Cosmetics, etc. And they also have a major omni-channel presence with expansion of stores as well. Now, if you look at the competition that they're facing, their competition is with direct guys like Amazon and Paytm Mall and Flipkart. There is no big platform which is competing with them. Yes, there's Purple and MyGlam, but nothing is even close to Nykaa, right? And if you have friends who are girls, you should go ask them about Nykaa. They will definitely tell you the same thing. Now, top product demands in Nykaa. If you look at this, Sephora, MAC, Falguni and Shane Peacock, Maybelline, Estee Lauder, Mama Earth, which has also become very famous. Mama Earth has their own website, but also sell here. Ritu Kumar. Lot of things coming up. Lot of things already there in Nykaa that you can go pick it up. Now, if you look at SWOT analysis, strength, weakness, threats, and opportunities, the strength is basically they have a large product portfolio and they have this amazing business environment in India. They have the strongest distribution game as well. They have a very low cost structure where you can start buying products at the range of 60 to even 10,000 rupees. Social media is a massive factor for Nykaa because they partnered up with a lot of influencers to give education. Now, apart from that, they also have a partner program where this is one of their strengths because they already partner up with the biggest dealers and suppliers in India like L'Oreal and Estee Lauder. So if they want to do something, it's very difficult because they're already collaborated with Nykaa, and because they have online and offline stores as well. There's a perfect match where I can go to the offline store, check something, and order this after I go home online as well. So this is something that they do very well. Now, if you look at weaknesses, apparently their customer complaints department is not very good, which can affect the growth of the business. Means their customer service is not great. um, they're spending more than average R&D expenditure. Why? Because they have to build their own products, so they're doing a lot of R&D, which may or may not work well in their favor. Now, a large amount of the company is rented rather than purchased, leading to higher costs. Listen to this very carefully, right? Most of the companies, large amount of it is basically rented rather than purchased. Company's ability to meet its short-term financial obligations is lower than the industry average, which might create an issue due to the lower budget for its quality control department than its competitors. The consistency might not be the same. Now, if something like that really goes wrong and people value product, whether the value of the product is good or bad, genuine or not, that will really affect a lot of things going forward, right? One sec. Why is this? Okay, now it's fine. Opportunities, yes, again, e-commerce kicking in, a lot of international reach. They're also going international with this. They might increase their profits, they might upgrade their lifestyle. The average ticket order can also go up. So this is something that Nykaa is definitely working towards. And if you look at their threats, sorry, mind the presentation. If you look at their threats, they have a large number of competition offline and online, but they still have massive amount of reach when it comes to their own platform. Now, substitute products are available and they're increasing because there are some products that are very expensive, but there are substitutes coming in at a cheaper rate. Now someone who does not have that money to go buy a luxury premium product will go buy the substitute product online available, right, with a good amount of education as well. Now the government is also imposing various restrictions, right, which is making the environment go like little greener environment. This leads to heavy logistics costs, paying environment taxes, eco-friendly packaging. All this will become an issue, especially when you do flash sales, because now apparently the government is also saying you can't do flash sales. So a lot of things that are coming with respect to government rules on e-commerce platforms, right? Now they do not have insurance policies to cover all possible events. So this is a threat that we have seen, that if there's any problem that happens tomorrow, they don't have enough insurance to cover any big lawsuit or something that might come to their company. Now, dependency on international suppliers for raw materials and intermediates to be used in the manufacturer, because they don't know how to do it properly. So basically, since they're still doing R&D, they're still depending on international suppliers or intermediates for their products, right? So tomorrow, if the raw material cost goes up, it will become an issue, and this is something that we will see very soon. Now, promoters Falguni Nayar Family Trust have actually pledged a certain number of equity shares in favor of a systemically important NBFC known as Infina Finance Private Limited. Basically, they have pledged or mortgaged their shares. Right now, this is something that is not good. We have to see whether after the IPO they remove it back or not. Now, if you look at their financial overview, this is something that we will check. Now, the growth and scale of Nykaa platforms. Listen to this very carefully. GMV, which is gross merchandise value, total number of amount of money that is sold by bought and sold there in the platform. If you look at it, it's growing from 1,650 crores to almost 4,045 crores, almost 56% growth. So that growth is good for us, because if we are investing in a company, we want to see growth, right? So this is very, very good from a growth perspective. Now, if you see growth and scale, if you look at the revenue of operations from 1,100 crores to 2,400 crores, literally doubled, slightly more than doubled in just a span of 2 years, means again almost 50% growth over 2 years, which is great. Now let's look at whether they're profitable or not. From an EBITDA perspective, so they were at 20 crores EBITDA and now they're at 161 crores EBITDA. EBITDA is nothing but earnings before interest, tax and depreciation. It is a profitable company. That means more sales come, more EBITDA margin is maintained from 1.85 to 6.61 EBITDA margin. Why has the margin gone up? Because they're not getting good margins from their own products that's selling. So that means it can become much better. Now, if you look at their capital turnover ratio, and increasing working capital turnover ratio is better, and it indicates that the company is able to generate a larger amount of sales, right? However, if the working capital turnover rises too high, which is in this case, it suggests that the company needs to raise additional capital to support the future growth through IPO. What does this basically mean? If I'm making 100 rupees, right, profit, pure profit, then I can use that 100 rupees to make 150 rupees tomorrow. But if I want to use 100 rupees and make 700 rupees tomorrow, or 4 times, right? If I want to use 100 rupees and make 400 rupees, it's very difficult. I need more money to grow faster. So usually they have to go raise money, or as you mentioned, they're coming out of an IPO. Now, contribution to gross merchandise value by existing and new users. If you see, existing users are 70%, new users are 30%. That means existing users are coming back and doing purchase after purchase after purchase, which is great. Right now, if you look at this, customers are willing to spend more and are moving away from discounting. Why? Because if I'm putting something on my face, I don't want discounts, I want good products, and I'm okay to spend a little bit more. Now, if you look at the financial check, now this is very important. Look at the revenue jump, EBITDA jump, margins are great, everything is awesome. Their EPS has gone to 40 rupees right now. Now, despite the pandemic, people have gone and bought fashion and beauty and personal care. Why? Because it's recession proof. It is COVID proof, because you're sitting at home, you still need your products to wash your face. Revenge shopping, crazy to think how much people are shopping despite being indoors, because now you just want to shop, do something, and EPS is constantly growing, which is again a good thing. Now, if you look at it from a scalability perspective, now see this. Now, if you look at the total income of 2,400 crores that they did in March, out of which a major chunk of it is purchase of traded goods, right? Major part of their expense is purchase of traded goods. If you look at this, I put the line over there. Major part of it, if you look at from 2,400 crores, almost 1,500 crores is only purchase of goods, right? Which is very important. And if you look at it, 283 crores is your employee benefit expense, which is salaries. Now, major part of the expense is purchase traded goods, which is keeping on increasing, which cannot be reduced. But there is 26% jump in revenue, and purchase traded goods increased by 21%. That means the margin over there is approximately 5%. that means they have to increase their volume game and increase their sales target, or somehow find a way to decrease the purchase of traded goods, boss. Something has to happen. But if they play on volumes, as a shareholder, your EPS will go up, and if it goes up, we make money, right? Now, if you look at our take, from our perspective, Nykaa seems to be the first profitable unicorn working on steady financials, growing at a very good pace. We also witnessed that the Nykaa has a unique monopoly when it comes to brand loyalty, because you ask any of your girlfriends, do you know Nykaa and do you love Nykaa? A lot of people love Nykaa. They don't want to go anywhere else. Now, we believe that Nykaa will not only give good listing gains, even though I don't look at listing gains, but I feel this is a good compounder for wealth creation in the future. Why? Because it has this beautiful monopolistic moat it has created in the entire market, where it is, I mean, it's very difficult for a competition to come tomorrow and take these guys out unless and until they screw it by themselves, right? So again, guys, this is only for educational purposes. It is not a stock recommendation, and this entire PPT was done by Devjani, so kudos to her, and I'm the guy who comes and talks about this. So hope you guys like this. This is a part of our Meta Finance series, and let me come back to the main screen. Guys, 27 minutes I finished this, so I hope you guys don't shout at me by saying, oh, itna lamba kyun kiya? Relax karo. But I hope you guys understood why I think Nykaa is poised to do well, is because they have this beautiful monopolistic moat. She knows what she's doing. She's been doing this from a very long time. She's passionate about it. Major thing to understand here is they're planning to go global, and if they go global, you can hold this stock for a very long period of time, because I'm pretty sure the EPS will increase if they remove all their debt, try to figure out, if they raise a lot of money and they try to figure out how to decrease their margins, the expenses with respect to purchase traded goods, they can increase their margins. And even a 1% increase in margin when it's volume, no, the EPS becomes better. And I think it is definitely a good stock for the future, and I don't see anyone else coming in the space. So guys, that is my take, right? Again, I hope you guys like this. I want to know your take on any IPO or this IPO. I want to know your take on this IPO. What do you guys feel? And if you like it, just say Meta Finance OP in the comments, because we take a lot of time, effort to give you this kind of information out. I will also put the presentation after this. So hope you guys like this. Hope you guys enjoy this. This is me, Shashank Udupa, signing off. Thank you, guys. Guys, also another important thing I forgot to tell you about the giveaway that I'm doing, which is approximately 26,000 rupees, which where three winners get 5,000 rupees of the stock that they like, which I will give them personally, and the next 10 winners get 1 year of Ticker Tape subscription for free again. Now, all the information about this giveaway is there on my Instagram. I'm going to put the link below, but if you really want to know what it is, I'll tell you here as well. So basically what you need to do is, on my Instagram post, you need to go tag a friend, and even if it's YouTube, it's completely fine. You have to go tag a friend and their favorite stock, and they have to come and reply saying why it's their favorite stock. The best answer, three of the best answers, win 5,000 rupees worth of shares that I will gift to you, number one. And the next 10 winners will get 1 year subscription of Ticker Tape for free as well. Now, what do you need to do for this? Damn simple, not much. You need to follow me on Instagram, you need to subscribe to my YouTube channel, and you have to download the Ticker Tape app. Again, I will put all the links below. You can do it one by one. And after you download the Ticker Tape app, I need you to give the email ID of your login into that link below as well, so that you can submit it to me, and then if you win tomorrow, you'll get 1 year access for free as well. So hope you guys enjoy this, hope you guys love this. I will see you soon, and best of luck to all the winners. Yeah.